Hey, welcome everybody to the 40 Finance channel. Today I'm going to do a TQQQ update. This is the 3x leverage version of the QQQ. I've talked about this one quite a bit on the channel, and if you're interested in more of a deep dive on what it is, there's another video that I've linked to down in the description with sort of an FAQ about the TQQQ. But for this video, we're going to focus very specifically on the short term as we enter July of 2022. Is this a good time to buy the TQQQ? So obviously we haven't had a lot of good news in the stock market this year, and really that sentiment hasn't changed much over the past few months. The things that are holding the market down continue to persist. We have not received any, I would say, good news on the inflation front, any recorded data that suggests that inflation's coming down. I haven't seen that. We still have high oil prices, and we still have the Russia-Ukraine struggle going on as well. Throw in supply chain concerns and China closures, and you've got yourself a very nice mix of limiting factors when it comes to the stock market. Now, on the good side of negativity, it probably will only take one or two of those negative headlines to reverse in order for us to see some relief. And the way that stocks have already fallen this year, there's an argument to be made that buying low today could pay off significantly in the future, particularly if you are looking at a longer term horizon like I am with the TQQQ. So let's kick things off with my rules that I personally have set up for myself in investing with the TQQQ. Then we'll take a look at where things stand heading into July, and I'll let you know if I'm buying right now. Okay, I've shared this document before and nothing has really changed in my eyes, so let's just review it. Number one in the rules of TQQQ investing, or at least my rules, is understanding the risk, right? This is not a risk-free proposition, but if you watch my FAQ video, you'll know that I feel pretty good that this one is not going to zero anytime soon. Number two, you should be very bullish on the long term of QQQ. So you think about the FANGs, NVIDIAs, Teslas, AMDs, you name it, you should be very bullish on technology as a whole, semiconductors, consumer technology. All those things are featured very prominently in the QQQ, and we are talking here about 3x the QQQ. So if you're not bullish on those companies or those concepts over the next 3 to 5 years, then it's probably not in your best interest to get in this one. Number three, we're looking to buy at or below a 14-day RSI, relative strength index, of 40. And there's been several of these buy points, almost endless amounts of these buy points since January 1st. And it doesn't necessarily mean that if you've bought them under 40, like I have, that you're necessarily in the green right now, because I am not in the green. I will show you that in a second. But the point is that you want to get it when sentiment is basically ridiculously low. Number four, and I have not done this, and I don't believe that this has happened this year, maybe once. But if you're looking for the quick trade, you're trying to sell your shares or options at or above an RSI of 70. So 70 is a magic number if you're doing this on the short-term level to try to get maximum positive sentiment and get out of the trade. I will probably follow that at some point, but I'm not interested in taking advantage of that here in this short term. Okay, number five, always have cash available. This is the hard part. This has been my hardest part this year as somebody who's bought in a lot into Q1, heading into Q2. Now we're still kind of in this flat line, near bottom type behavior. And I'm really been scrambling for cash, to be honest, just because of some other family expenses, vacations, things that have come up. But it's very important that if you're going to go through here, that you have enough cash to take advantage of 14-day RSI below 40, right? So if you're planning to jump in this TQQQ game, you have to be able to average down, particularly in this environment. Okay, we know about the pressures that are on the stock market. So you have to be able to average down. If you put all of your chips on one date that you buy, then you're taking the risk that it goes down further, and this thing can go down fast. So you have to be able to average down to really come out ahead and beat the odds. All right, final rule number 6, it really helps to have a hedge of some kind. So if you go deep on the FAQ video, you'll see that there's a lot of people who recommend bonds. There's a TMF ETF that some people look at as a potential hedge. And I would just say that the hedge part of things becomes more important as your percentage exposure goes up. So for me right now, I'm in that 10% range, if even that, on my total investment in the TQQQ. So I don't feel a ton of pressure to have like this huge hedge off the side because it's not my only bullish bet, if you will. I own regular Qs, which, you know, should be just fine, certainly for the long term. But if you are going to do some sort of all-in strategy or 50% or 30%, then you do need to think about having a hedge plan in those cases. All right, so here's where we stand today on the TQs. You got a price of $25. Over 1 year, it's down 58%. That's not a huge surprise considering how hot the market was last year and where we are today. But you see the 52-week range is 21.32, all the way as high as 91.68. And what might be surprising to some of you is that we actually hit $62 or so at the end of March. So it did dip farther, all the way down to $39.86. That was on March 11th or so, and then it popped all the way back up to 62 on March 29th. And ever since then, we know what happened in the market, and we've taken even a couple more legs down here in recent past. Quick plug here for the SeekingAlpha platform that we're using here today. If you're interested in learning more, getting a 14-day free trial and a 50% discount, my affiliate link is in the description. This is a platform I use all the time. I have review videos on it, so go check it out. It really helps me on tracking my stocks, learning about new stocks, and of course covering the TQQQ as well. But let's flip over to our momentum indicators, right? Because that's what's really important here. The price, of course, is your investing scorecard, but momentum on this thing can shift very, very rapidly, going from the bottom to the top at a much faster pace than the regular Qs. So if we switch over here and let's just do a 3-month view so we can get a feel on our 14-day RSIs. And let's just expand this RSI here so that's the only thing we're viewing, okay? So we know where we were at on the 29th of March. You hit a 75 on the 14-day. So with that in mind, there are people who could have sold at that point, depending on when they bought in and what their goals were for the investment. For myself, I'm looking much longer term, so that's not a concern of mine. Now, how about buying, though? We're talking about, is this a good time to buy the TQs? And we can see this RSI line here of 40, and you see how that dots over. We're pretty significantly over the 40 mark right now. So I did buy a few shares in and around this area when it was at or below 40. There was also several opportunities to pick that up here in April. But as far as right now is concerned, you're not really seeing that buy indicator. The market is down today. And if I'm guessing here, you're at a 43, so it could be getting closer. But you see how this would have worked for some people over a smaller time frame, right? A 3-month time frame. Now, of course, this is just the RSI chart, not the price chart, right? So it looks like pretty obvious, like, okay, buy under 40, sell over 70. So, you know, somebody made $1 million doing this. And perhaps somebody did, but if we look at it from a price perspective, on the way the volatility has chopped at this, even if, let's just pretend you bought right here. This was a low point for the RSI, seemingly in the 20s. I don't know for sure, but you would have had that price at 52, and your next 70 would have come on May 27th, and you would have only gotten $33 for it. So that would have been a net loss at that point. And that's where my long-term strategy sort of protects against some of this, because RSI is not the same thing as price. You're just looking for low sentiment. And what I personally believe, and we can expand this out, let's just say 5 years, the TQQQ will go up as the Qs go up. So if you went back in time and you bought this thing in January of 2020, you'd be roughly flat right now, but you would have had several opportunities, depending on what your goals were, to have sold it on the way up, and then it just depends on if you did that or not. But now we're heading back to a point into pre-COVID, which in my opinion, makes for an intriguing opportunity to get in, assuming that you get sentiment on a very low point. All right, now let's think about that sentiment in another way, from more or less a fundamental perspective. And to do that, I've set up the top holdings of the QQQ here in a portfolio in SeekingAlpha. This way I can get a quick look at how these stocks are doing and compare them to each other. And you can eyeball a lot of things here, but if you just take a look at the 52-week range and you make, let's just call it the broad assumption that you want to buy stocks lower as opposed to at their all-time highs, well, you're certainly coming to a point, take out maybe Pepsi here and T-Mobile, where all of the biggest stocks in the QQQ are hitting roughly their 52-week lows. Now let's throw in some other fundamental factors. I talk about forward PE a lot. Let's see how our forward PE projections are going across the board. For Apple, Adobe, AMD, you're in 20s or below. Same thing for Broadcom, Comcast. Costco arguably might be high at the 37 point. But you just go down the list, you got Google at 20, Intel at 11, Facebook under 15, Microsoft under 30, Netflix in the teens, PayPal in the teens, Qualcomm in the double digits, and Tesla riding a little high at 61, but we know that Tesla is a strong momentum stock, and the multiple for that one could go up at any point. All right, what about growth opportunities? How is revenue growth looking in this inflation time for these stocks? And we have double digits, not for Comcast, but we have double digits, including plus 45 for AMD. You've got plus 3% for Costco, roughly flat for Intel. Google's a plus 20. Intuit's a plus 20. Meta, Microsoft, Netflix, NVIDIA, all growing double digits plus. Then you got PayPal, Qualcomm at plus 30, T-Mobile, and then Tesla, which had the highest valuation multiple, but they're also growing plus 50%. On the revenue line this year. So in terms of the long view, I don't see a lot on here, at least not yet, that has me super worried that these companies are going to contract or, grow negatively. Their comps will be slightly negative, certainly because some of these companies were plus 50%, plus, 30% last year. So they'll still grow. The headline will be that their growth slows, but slow growth is still growth, and from a fundamental perspective, that is still good. Now, what about bottom line growth? So EPS forward, how are the profits looking for this year? Are we all done growing on the profit line? Apple plus 26%, Adobe plus 16, AMD plus 57, AVGO plus 22, Google plus 31. NVIDIA plus 37, so on and so forth. There is plenty of profit growth going on for these companies projected right now. So this is another reason why I don't feel super bad buying into the TQs despite all of the negative momentum, because some of the baseline metrics that we look at in fundamental analysis are still solid. Now it's funny, as I'm recording this, QQQ is down minus 2% today, and it keeps going down more just in the span of recording this. And their RSI, at least right now, is showing in the 32. So from a buy-sell perspective, we may very well see TQQQ go under the 40 RSI point if this trend continues. Now, in terms of my holdings, I kind of highlighted them here. In the blue, I've got 160 shares, 43 some odd dollars. I am down 40% on my TQQQ. So it's not a sexy number by any means, but for all the reasons I just showed you, I'm really not super concerned. And I will continue to average down. And frankly, at 43, if this is getting into 25s and 20s, by all means, it's a good time for me to even buy small lots, right? 2, 3 shares, just keep chipping away at my cost basis. And the goal, again, is for the long term. Now, on the other side of the coin, I also have this 51 shares of QQQ. And that is down minus 20%. I'm at 358. It's at 286. So I have just as much opportunity to get into that and lower cost basis through what we're seeing right now in the market as well. All right, a couple questions that always come up. When do I think the Qs will go back to all-time highs, TQQQ, etc.? I'm not sure if all-time highs is in the cards for this year. It certainly doesn't feel good to be in the cards for this year. But for myself, I feel very good that the underlying companies in both of the Qs will continue to do great things for the long term. They will continue to grow revenue. They will continue to grow profits. So I really don't mind bag holding, so to speak, for basically as long as it takes. Like, we could have 12 months of this crap. We could have potentially 2 years of this stuff. Again, one of the rules with this investment is to be bullish on the Qs for the long term. So with that in mind, I tend to think that some of the negativity is going to flip or perhaps get not as worse as it currently stands. So I feel good about the future, but everyone has their own opinion on these economic times. All right, guys, so that's the July TQQQ update. Let me know if you're buying at this point right now, where you stand with your investment and where you see things going with this one over the next 3 to 6 months. Before you go, don't forget to check out that special offer for Seeking Alpha Premium in the description. I hope everybody's having a great summer. We'll see you on the next video.